Hello, and welcome to another installment of Paul's Thoughts About Everything. I'm Paul Carmen, and I'm an advisor with LPL Financial based in Boca Raton and Palm Beach, Florida. While my offices are in Florida, I'm licensed in and have clients in other states as well. If you like these installments and would like to send me a comment or a suggestion, please drop me an email at paul.carman@lpl.com. That's paul.carman, C-A-R-M-A-N, at lpl.com. Today, I'd like to talk about something that many people have purchased, but few people really understand, and that's life insurance. When purchased and structured correctly, life insurance can be a wonderful tool. Most people don't understand the tremendous benefit it can provide, from needed educational expenses or family income upon a decedent's death, to building a legacy of wealth that, when properly structured, can fund future dynasties for generations to come. It can protect the value of an estate and provide beneficiaries with income and estate tax-free proceeds. It has the potential to change lives in a meaningful way by funding charitable endeavors far into the future. Unfortunately, it has many times gotten a bad reputation because it is often sold improperly, i.e. the wrong type of insurance for the need, and just as often, it's improperly structured. Simply put, for an amount of premiums paid, the insurance company will provide an amount of benefit at death. The cost and availability of life insurance, however, depend on a number of factors, including age, health, and the type of insurance purchase. Almost all life insurance is medically underwritten and is subject to underwriting approval. Remember, you can't buy, you must apply, and they can deny. Evidence of insurability, age, limitations, and pre-existing health conditions all affect rates and insurability. Today, the types of life insurance are many, but the understanding of the nuances of life insurance by many of the people who sell it is sadly lacking. Lower premium doesn't necessarily mean better. Whole life, universal life, index life, variable universal life, and term life, the choices are many. So are the questions that follow. What type of insurance do I need? How much insurance should I own? How should the policy be structured? Who should the beneficiary be? How should the benefits be received? What company best fits my needs? What premiums are reasonable? And how do I know that the policy I'm purchasing is the right policy for me? All of these and many others are legitimate questions, and your trusted advisor should have fact-based answers to all, and should be able to provide you, the client, with enough information to make an informed and intelligent decision. Let's talk briefly about some of the types of insurance. This is not meant to be a comprehensive, in-depth policy analysis, but merely an overview of the types. Whole life insurance generally has guaranteed premiums, guaranteed cash value, and a guaranteed death benefit. It's the most conservative type of coverage. Loans can be taken against the cash value, but interest will accrue and any loan amount will be deducted from the death benefit at the death of the insured. Universal life insurance has premiums, death benefit, and cash value as well, but all of them are based upon premiums paid. Premiums can be flexible and the death benefit can be guaranteed if a specified premium is paid. Cash value performance is based upon the underlying performance of the insurance company. Index universal life is similar, but crediting is based upon a market index, i.e. the S&P 500, instead of the insurance company. Variable universal life offers flexible premiums and the opportunity to participate in the market's ups and downs through internal sub-accounts. Term insurance offers a fixed death benefit for a fixed premium for a fixed period of time, usually 1, 5, 10, 15, 20, or 30-year level periods. When the term is over, there's no cash value and the policy usually lapses. Some term policies offer the ability to convert to a permanent product, but the choices are usually limited and premiums are based upon the age at conversion. Let's talk for a minute about life insurance ownership. It's commonly believed that life insurance is tax-free, but is that a fact? Well, actually, life insurance is generally income tax-free, but it's not estate tax-free. This means that every dollar held in your estate at death in excess of the lifetime exemption would be taxable. There are specific trusts designed to hold life insurance outside of the decedent's estate that can alleviate any estate tax burden. Irrevocable Life Insurance Trust, or ILITs, accomplish this by the irrevocable transfer of a policy to the trust and having proceeds passed directly to the beneficiaries tax-free. There are many opportunities that should be considered in designing and implementing these trusts, such as multi-generational planning, and your advisor should be able to help you make wise and informed decisions. Well, I hope you found this information helpful, and I will go into greater depth later on in a later installment. Please feel free to reach out with questions or comments to me at paul.carman@lpl.com. That's paul.carman, C-A-R-M-A-N, @lpl.com. Thanks for listening.